INDEMO is a regulated peer-to-peer platform from Latvia that promotes an average annual return of 22.8% on its website. This return is coming from investments in discounted debts that are backed by real estate collateral. In today's video, we want to take a closer look at the business model and the risk profile of the Latvian INDEMO platform and examine how much substance there actually is behind those promised returns. SIA INDEMO was registered in the Latvian Company Register in May 2022, while the platform began operating in June of 2023, with the official launch for investors taking place in November. The name INDEMO derives from investment democracy and is intended to reflect the company's core mission, which is to offer retail investors the same investment opportunities that have been traditionally reserved for institutional players and large funds, along with comparable returns and risk levels. Within our community, the experiences with INDEMO have generally been positive so far. After participating in the community voting for the first time this year, the platform achieved a respectable result, finishing in P12 with 3.32 points based on 93 reviews. A look into the Latvian Company Register reveals that the platform has a very broad ownership structure with more than 20 different shareholders. With 21.6%, Ilya Huggins is the largest shareholder and thus the beneficial owner of the platform. He is considered the driving force behind INDEMO's operational activities in Spain. Since 2019, he has been working as managing partner at the Spanish company Atlan Advanced Management, which specializes in the management, acquisition, and recovery of non-performing loans, as well as related investment and advisory services. In addition to his in-depth market knowledge, he also possesses a strong network of contacts with Spanish banks and debt management firms, which is an essential aspect when acquiring NPL portfolios. INDEMO is led in its day-to-day operations by CEO Sergej Sviskovskis, who has been involved with the platform since the very beginning. The Latvian native, who owns 5.4% of the platform's shares, worked for 10 years at a Latvian commercial bank before spending 2 years as senior legal counsel for the peer-to-peer marketplace Mintos. Being in that position, he played a key role in supporting the platform's licensing process as investment brokerage firm, enabling its transition into a regulated environment. Next up, let's review the business model and the platform's financial stability. The Latvian platform generates its revenue primarily through a commission of 5 to 6%, which is paid by the product originators. This commission is not linked to any profit sharing for investors, but is paid from the operating income of the debt seller. In 2024, INDEMO achieved a revenue of €386,000 from commission income. Since 2022, the financial statements of SIA INDEMO have been reviewed and audited by Crow Global. According to the latest financial report, INDEMO recorded a loss of around €682,000 last year, which is certainly not uncommon for a young company in its growth phase. Based on its 3-year financial forecast, the platform is anticipating to reach the break-even point by the end of 2026. Achieving this would require a managed portfolio of 25 to 30 million with around 10,000 active investors. By comparison, the platform currently manages a portfolio of 80 million euro with 15,000 registered users. Despite the lack of profitability, INDEMO's balance sheet looks actually quite solid. This is mainly due to their small balance sheet of only around 495,000 euro. Another key element for the strong financial position is the shareholders' financial support, who contributed an additional 756,000 euro in share capital last year. Next up, let's take a look at what investors need to know when investing on the INDEMO platform and what they should pay attention to. At the core of the INDEMO business model are investments in discounted debt securities. Simply put, these are non-performing mortgage loans that are purchased from Spanish banks and then resold at market value, with the profit margin ultimately representing the return for investors. For those of you that want an even deeper understanding, let's take a look at how it works in detail. First, non-performing loans that no longer meet the bank's interest are offered on the market at reduced prices. Then Tamarindo Vector, a licensed INDEMO partner, which is regulated by the Spanish Central Bank, buys the loans from the Spanish banks. In this case, Tamarindo primarily acts as an SPV. The funds for purchasing these loans come partly from Tamarindo itself and partly from the debt securities issued on INDEMO. Hence, both parties share the risk of the assets' acquisitions as well as the potential profits. Once the claims have been acquired, debt collection is outsourced to asset management companies that are responsible for actively managing the loan portfolio. These partners are already involved in the evaluation and selection of the discounted claims in advance. The most important partners for debt and loan management include Atlan Advance, Taurus Iberica, and Revesta Soluciones. Once the debts are collected, the profit is split 50-50 between the INDEMO partners and the investors. By investing in discounted debts, INDEMO advertises an annual targeted return of 15.1%. This return is based on a moderate scenario where 90% of the outstanding mortgage debt is settled within 18 months of the investment date. From more than 100 published claims, 13 projects have so far been recovered and sold, achieving an average annual return of nearly 26%. The business model therefore appears to work, although for a meaningful overall picture to assess the expected returns, the projects that ultimately were not recovered also need to be taken into account. When it comes to investing, investors on the platform can either choose to invest manually or using the Auto Invest feature. The minimum investment amount on the platform is currently €10. So far, no costs or fees are charged to investors, neither for investing on the platform, withdrawing funds, nor for portfolio management. To invest on INDEMO, individuals must be at least 18 years old and either hold EU citizenship or alternatively an EU residence permit. Legal entities can also register on INDEMO, although company accounts are required to make a minimum initial deposit of €5,000. For those considering signing up, there is currently a cashback campaign running until the end of the month, offering up to 5% cashback. If you use my affiliate link in the video description below, you can even get an additional 0.5% on top. Now let's take a look at INDEMO's risk profile, which I will break down into platform risk and lender risk. The peer-to-peer platform, which is operated by ZIA INDEMO, has held an investment firm license since November 2022, issued by the Latvian central bank Latvijas Banka. As a result, the platform is subject to the provisions of the Financial Market Directive MiFID II. Consequently, investor accounts are protected with up to €20,000 under Latvia's investor compensation scheme in the event of the platform's insolvency or misappropriation of investor funds. In addition, investor funds must be kept separate from INDEMO's own capital. In case of insolvency, these funds are not touchable by the bailiff and cannot be used to cover third-party creditor claims. Due to the platform's regulation, INDEMO must also comply with a high level of compliance and transparency standards, which enhances the safety of the peer-to-peer platform. Among other requirements, the platform must regularly prepare audited financial statements, allowing for an assessment of its financial stability. As previously discussed, INDEMO is currently not yet profitable, which represents the main platform risk at this point in time. Now let's turn next to the lender risk level. The quality of the INDEMO portfolio depends heavily on the performance of its lending partners, who purchase non-performing claims in Spain at a discount in order to resell them at a profit. A key partner in this regard is Tamarindo Vector, a Spanish SPV that holds the mortgage claims on its balance sheet. This company is licensed by the Central Bank of Spain as a real estate lender and mortgage lending institution. According to the 2024 financial statements, Tamarindo achieved a profit of €56,000 last year. On the other hand, the risk for investors is directly linked to the quality of services provided by the involved asset management companies, which are responsible for due diligence, claims management, and the recovery of non-performing loans. They handle the scoring processes, conduct risk assessments, and select the most suitable claims on the market. INDEMO's base prospectus outlines several scenarios that illustrate how strongly investment success is tied to the quality of claims management and realistic assessments of the underlying assets. If you want to learn more about the risk assessment of debt securities and the debt collection process, I recommend reading my INDEMO review on the blog, where I go into these topics in greater detail. Here you can see a short summary of what I consider to be the biggest advantages and disadvantages of the INDEMO platform that have already been discussed in this video. Now let's move on to a final conclusion and my personal assessment. INDEMO is a promising alternative in the peer-to-peer lending space, providing genuine added value for investors who want to meaningfully expand and diversify their portfolios beyond traditional consumer loans. The core of the business model consists of investment opportunities in discounted debt instruments secured by Spanish mortgages. This approach is quite unique as it cannot be found in this form on any other peer-to-peer platform. The main risks include illiquidity, as investors must commit their money for at least 2 years without receiving a guaranteed regular cash flow during this period. This is an important aspect for income-oriented investors to consider. Additionally, the actual performance of INDEMO's partners can only be reliably assessed over a longer time frame. Therefore, both above average and below average market results are possible. Those who can come to terms with this uncertainty with the prospect of potentially earning above average returns should consider INDEMO as a possible alternative for their portfolio. To wrap up this INDEMO review, I'm now curious to hear your personal take in the comment section below. What do you think about the platform's business model and their risk profile? Thanks a lot for watching until the very end. I hope you guys have an enjoyable weekend, and I hope to see you guys in the next video again. So long. Bye bye.